you want an exposure to a market or an
Everything they need in one place.
Be the world's foremost authority on
Individuals, advisors and institutions. Hello and welcome to the Morningstar series, Why Should I Invest With You? I'm Emma Wall, and here with me today is Job Curtis, manager of the gold-rated City of London Trust. Hello, Job.
Hello.
So I thought we'd look at the challenges and the opportunities facing your sector today. You invest predominantly in UK equities. Last year was not so great for UK equities. It's sort of flat. What can we expect this year?
Well, the UK equity market is an international market in that over 70% of the profits come from overseas. So it reflects global markets. It has quite a big resources sector. I mean, the oil sector and the mining sector are components of over 15% of the market. And I think that weighed it down last year because, of course, the UK economy was quite strong. Looking forward, I mean, there's some attractive yields available in the oil and mining sectors, but there's still not a sector which I'm particularly enthusiastic about. I've got some exposure to BP and Shell, but where the dividends are attractive, but I'm actually below average relative to the indices as I was last year, which helped the relative performance. But I think going forward, the dividend flow from the UK equity market looks pretty attractive and the domestic economy looks strong. So I think those are two definite positives, particularly against the background of very low interest rates.
And how important are dividends when looking at total returns for a trust such as yours?
Well, I think dividends are important. I mean, there's lots of different ways to skin a cat, as they say, and different fund managers have different ways of managing money. But the dividend yield is a real return that shareholders actually receive. And as a valuation yardstick, I think it is very helpful. And often you can buy into stocks that are out of favour, and if you're paid a decent dividend, you're being paid while you wait. And if the yield drops to a very low level, that's an indicator that shares are becoming quite expensive. And in addition, it's a good tool for corporate managements. If they have to pay a rising dividend to shareholders, that's a good benchmark to measure capex and acquisitions against.
And you've mentioned there some of the sectors that perhaps didn't do so very well last year and perhaps will continue not to because of the oil price. Yes. What about where you are seeing opportunities? What's exciting you in that sector?
Well, I think some of the domestic sectors do look quite attractive, in particular house building. As a country, we are very short of houses at the moment. There is there's a huge demand that's not being met for new houses, and the house building sector has consolidated a lot post the financial crisis. And I think the leading house builders quoted on the stock market are in a good position at the moment. And I'm invested in 3 of them, which have got long land banks. And I think that's an area where you'll see decent growth and good dividend flow.
And it's also a sector that can be quite highly politicised. Yes. We can't really talk about the UK without talking about what's coming later this year. General election, maybe even 2. Yes. Does that weigh on your mind as a fund manager?
Well, I think the politics is important. It can have an influence. But when you think about it, I mean, the opinion polls are pointing to a hung parliament. Well, that's what we had at the last election. So in some respects, there's not a huge difference. I mean, it is uncertain. But I think you have to remember UK equities are over 70% profits are from overseas. So, and I think, something like the house builders, yes, it may have an effect. I mean, but I think all the politicians want more houses to be built. So I think some of the underlying fundamentals don't change. And if there is a hung parliament, it means arguably it'll be difficult for sort of hugely radical moves to be put forward, if they have to build coalitions between the parties. So it's hard. I'm not a prophet who can completely predict what's going to happen. And so, like everyone, I'm watching it. And but I think it's something that is important. But we have got an independent central bank as well setting interest rates. So I think there are reasons to be relatively calm and sanguine about it.
So would you say that you are bullish on UK equities at the moment?
I think the equity market is attractive for its dividend flow. It has, in terms of some of the other valuation measures we look at, it's not as cheap as it was. But I think relative to the alternatives, it does look solid value to me.
Job, thank you very much. This is Emma Wall from Morningstar. Thank you for watching.